FinTech Insider Interviews. I'm Simon Taylor from 11FS, and today I have the pleasure of speaking with Tom Blomfield, CEO of Monzo. Tom, how are you?
Very well. Good afternoon.
Thanks for being back on the show. A little bit more dressed down than last time you were here.
I'm trying to remember what I was doing last time. I can't. I was dressed in black tie. I can't remember where I was going.
Yeah, there was a tuxedo, some awards thing.
Who knows?
Too many awards in your life. So let's just do a quick recap. So we have a lot of international listeners now on FinTech Insider. So let's just recap who are Monzo.
Sure. So Monzo is a new smartphone-based bank in the UK, providing current accounts to retail customers.
And you guys started more as a prepaid card with an app, and you're now flipping to current accounts. So can you give me a feel for how many customers do you have as prepaid card users and how many customers you have as a current account?
Yeah. And so we launched a prepaid card as a sort of a prototype. We always intended to get a banking license and launch a current account. It was just going to take a bit of time. So the prepaid was a way of sort of getting early feedback. And it went just way better than we expected. We thought maybe 5 or 10,000 people might take this prepaid thing because it wasn't a full bank account, it wasn't fully featured. We hit almost 500,000 before we paused signups about 3 months ago to start the migration onto the full current account product. We have a live counter on monzo.com. As we're recording this, I think we're up to about 175,000 current accounts with a pretty regular stream of people over. We'll be serving notice to wind down the prepaid scheme at some point in January or February, I think. We're just going through the process of notifying customers that they can upgrade and assuaging some of their concerns. I mean, 90% of people are very happy to do so, and 10% have sort of these questions like, I love the prepaid card because of XYZ. I don't want a current account because my current account from Big Bank does all these nasty things. And it's a sort of process of education saying, well, the current account actually doesn't do any of those nasty things your Big Bank does. So we really would like you to upgrade, please. Because you can use it exactly the same way as a prepaid card.
So the use is the same. So a couple of things there that interest me. First and foremost, would you, if you had to do it again, would you launch the prepaid card first? And what did you learn from that approach? Because we've seen different approaches in the market. Atom have gone straight into lending. We've seen Tandem buy Harrods Bank and go that route and look at a bit more lending. We've seen Starling build the fully featured sort of account. And now that's out there, it does a lot more. So would you do it again? What have you learned as well?
For sure, I would do it again. The prospect of spending a couple of years without any customer validation or customer feedback really scared me. I had no idea if people actually wanted what we thought they wanted. And the prepaid scheme was a really good way of proving, sort of figuring it, not even proving our hypotheses. Many of the things we thought were wrong. And we figured out a bunch of other things that we didn't know. And so there are a couple of things that really were surprising and unbelievably valuable. One is how emotional people's relationship with their money is, how they're influenced by not always rational economic factors, but behavioral psychology more than anything, and emotion and anxiety and hope and fear and all these very powerful emotions. The second thing is we figured out how to do viral growth. So just before we paused prepaid signups, we were onboarding probably 65 or 70,000 funded accounts a month with almost no marketing spend. So we figured out these kind of network effects and these viral mechanics that I don't think you could strategize. I think you have to just sort of through trial and error figure that out. And so we've got this very, very powerful growth engine that we're about to turn back on. So golden tickets will be coming back to the current account in January, probably.
You heard it here first. Golden tickets are coming back. Get ready for those golden tickets. I know they were much loved when they did appear. So but on the other side, what lessons did you learn the hard way? Was there anything where you kind of look at it and go, oh yeah, learn from that? Because I see there were lots of outages, there was downtime, there was having to communicate with customers a lot. There's, for example, there was having ATM fees, all these sorts of things.
Yeah, I think it let us learn about a bunch of those things that if we were only now launching our first product into the market, we would have had to learn all those lessons on the current account. So how much of your technology do you outsource to third parties versus how much do you build internally? We got elements of that wrong. And we've been able to, because we had that early signal, rebuild a bunch of it internally, which we're now much happy with, for example. Or ATM fees. As you start to move into a mainstream audience, you see ATM usage change. So our super early adopters cost us in the region of £6 per year on ATM fees. When the heavy travellers got involved, that escalated up to £15, £16 per user per year, which was not sustainable. And so you're going to have to learn that lesson at some stage. I prefer to learn the lessons early to be able to fix them and then have a product that works well, rather than spend 2 or 3 years without any signal and then, learn on the job, if you will.
And that customer feedback is crucial to being able to learn that. But do you think, you make a really interesting point about as you move into the mainstream, do you think you've been lucky that you've had a customer base that wants your product, believes in your product, and likes how you communicate, and that changes once you become a mainstream bank?
I don't know. So it's not for everyone. And the debate becomes, how many people is it for? This sort of colloquial style we have, this informality, this transparency, it's definitely not for everyone. We think it's probably for 75 or 80%. Others might argue it's only for 5 or 10%. It's hard to prove that predictively. You just look empirically at how big can we get. Frankly, it's not just engaging in that kind of hypothetical debate at this stage is sort of...
It's hard, isn't it?
It's hard and almost pointless. It's other people have their strategy, we have ours. We'll see which one works.
Where did that informal style really come from? Did it just come as being entrepreneurs and that felt right? What was the genesis of that? Or did it just happen and you were sort of like, this felt right? I mean, what was...
I don't know. Looking back, it's hard to pin it down to a single decision or a single person. In the very early days, Jason was really involved in sort of helping to shape our community strategy and our sort of transparency before we had very many customers. Tristan took over as head of marketing. Tristan joined as an intern, I think. Jason actually hired him as I think he's like a community intern or a social media intern. He's now our head of marketing. Huh. And a lot of it's come from him and his personality and this sort of very genuine sort of, just empathy, I guess. So I don't know the answer to that. I think it's a combination of our personalities and sort of the things we believe. And also, it's just, it seems to work really well. It's surprising how well it works. But secondly, it makes life easier when you don't have to have a dual narrative, like the internal story for your staff and then the external, what are we allowed to say externally? If it's just all of the same, actually, that is the way, the same with our communication style. That's just the way we talk.
Jason always laughs at my PTSD from big bank days when I've had to do, and one of the anecdotes I'm thinking about is changing terms and conditions that had to go into telephony and to the post and via SMS and the arguments over where a word was placed by an auditor. But unbelievable. So I think it probably simplifies things from a cost standpoint as well. But when Monzo does go down, when you have technical issues, you tend to give a lot of technical information into what the error was and how you resolved it.
Yeah.
Do you think that's something you're going to be able to continue doing? Because at the moment, you could argue, and I don't know if this is true, you'll know this better than me, that your customers are somewhat in that tech bubble and they appreciate it, but mainstream customers might find that scary or off-putting in some way.
Well, so firstly, hopefully we have less outages to explain away. Secondly, even now we have 500,000 customers. I would suspect less than 5% engage with that kind of content or would understand it if they did engage with it. So already we don't have 500,000 programmers as our customers. We have a few thousand.
Fair.
And I think it's just reassuring, and we have a lot of mainstream customers now, and it's reassuring to them that their techie mates sort of had a look and went, actually, yeah, this seems legitimate.
Yeah.
So I don't think we're a million miles away from the mainstream already.
That's interesting that, everybody's got their techie friend, and actually having legitimacy or credibility with them actually has a network effect. Yeah. And you talk about this viral growth sort of thing. A lot of products and services these days do come from the tech community. It's the tech heads that buy the Teslas first and then everybody wants them. It's always that kind of way down. The one question we got from the 11FS team when I put it out that got the most emoji reactions inside Slack was alongside current accounts, we really want to know if you've got plans to enable a joint account anytime soon.
So we publish our roadmap online. It is on our roadmap. I can't remember exactly where it is, 6 to 12 months out. It's not something we're actively working on right now, honestly. There are a few key features for the current account we need to get to first. POTS is something that is an enabler of joint accounts. So a joint pot is a nice way to sort of get towards that view. We debate this internally, whether whether sort of joint pots are enough or you want a fully integrated sort of transaction feed. And it's really interesting because I think it's one of those things that do get really emotional. I've married someone and I feel like our finances should be intertwined. It's a symbol of our oneness and our commitment, which is a very emotional thing. And sort of some of our designers are like, well, isn't it much more useful if you each know what you're spending and then you combine it sort of at month end? And it's like, well, no, it's an expression of our union.
Yeah.
It's really interesting.
And everybody's going to be different on that spectrum because some people might not be doing the joint account, or they are, and then they've got private accounts, and then they've got their own spending pots. And so that emotional side of it, you just can't get away from. It's interesting. So next one up was the news recently that the big banks just got an extension from the Competition Market Authority for their APIs and PSD2 around open banking. So as a quick recap for listeners, in the UK, the Competition Markets Authority had said, banks, you must provide data level access to transactions and other bits of information inside a customer's bank account to third parties under this secure framework. My question to you is, did you expect this sort of activity, and what do you think of the approach of the big banks versus challengers? Is regulation going to make a difference, or are we really reliant on the challengers to change the market, and the market's going to drive the change?
A lot of questions there.
Sorry, you can step through them one by one.
Let's start with the first one. Did we expect this? This specifically. No, some kind of rockiness. I think we described as, like, the implementation was going to be rocky. There were going to be sort of hiccups and delays. This is one form of rockiness, so not unanticipated for sure. It goes back to strategy, really. There are people in the industry who have kind of pinned their colors to an API strategy, or you could build Monzo on top of the APIs. Why do you bother going into a banking license, building all this tech, raising all this money, blah, 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 blah. You should just do it on top of APIs. And there's a theoretical purity to that argument, but a practical reality that makes it really difficult, which is that these APIs are going to be slow and going to be broken and just won't work to start with. And I don't want to gamble the future of my business on the big banks sort of opening up really easy to use APIs. I'd much prefer to have control in my side of the court and take all the pain and upfront cost and compliance and risk and regulatory burden that we've gone through for the last 3 years, but then have almost entire control of the full stack. I think in a period of time, you could rebuild a Monzo or whatever the winning model is on top of a pure API-driven model. But I think that period of time might be 5 or 10 years away. Yeah. So I think the immediate future of open banking PSD2 is going to continue to have trouble until it doesn't.
There'll just be a moment in which it flips. And my own thesis on this has been, for some time, we're going to see disappointing results from the big banks in terms of APIs, because where's the carrot? Like, where's the upside? They have a large percentage of the market, and do they need to be opening themselves up to potential competitors to them, versus somebody who's coming into the market to acquire new customers that can offer a new feature that hasn't lost that customer yet? There is only upside. It's a bit less zero sum.
For sure. Or it even shrinks the market size entirely, which is really painful for big incumbents. I mean, you see some of the big banks. So HSBC brought out their aggregator app, I think. So some of them, they've all got an API strategy, I think. But I don't think they're as enthusiastic about that as they are just maintaining their existing propositions. And it feels to me like just another compliance program rather than something that could be a strategic opportunity that's across the top and bottom and middle and throughout the organization being grasped with both hands quite the way it possibly could be. For sure. But it varies bank by bank, I'd say. That's really interesting. There were reports recently that you may, quote unquote, do an IPO in the next 3 years. How do you know where this came from? Do you know how true that is? I do know where it came from. It was my sloppy copywriting. So you can trace the first mention of an IPO back to maybe not the first, a prominent mention of the IPO back to our annual report, where I wrote a 3 or 4 page sort of introduction explaining what our strategy is today and what it will be going forwards. And we warned crowdfunding investors that they wouldn't have liquidity anytime soon, basically. That's why we talked about IPOs. Like, the only way you're going to, if you invest in Monzo, you get shares. There is no liquid market for those shares today.
You can't sell those shares.
You can't sell them, and you will only be able to do so at an IPO. That might be 5 or 7 years away, is sort of the message we put out with our crowdfunding.
But you haven't said it is going to be. You said it might be this period of time. There's so much to happen.
But then what happened after that was we started advertising for a chief financial officer, a new CFO. And in that we put, you may do an IPO in the next 3 to 4 years. And then the Financial Times and Telegraph got very, very excited. Wow, Monzo's accelerated its IPO plan. It's like, well, or Tom's just a sort of sloppy copywriter.
And or you're trying to attract a very strong CFO who might appreciate the challenge and that sort of thing.
Yeah, so we don't plan a roadmap or a business strategy in the same way a big bank does. When you're growing between 1% and 4% a year, it's really easy to plan. Last year, we grew, over 1,000%. We grew 5% week over week. And so trying to plan on anything more than about a 16-week time scale is basically impossible. So to say an IPO is going to be 2 years or 4 years or 7 years is, frankly, anyone's guess. Startups operate in the sort of in an environment of very high uncertainty, and it's about retaining optionality, keeping the options open, being able to react to changing market conditions. Or we launch a new product feature that accelerates our growth threefold, or we launch another product feature that totally fails. Mm-hmm. You can't really forecast business in that environment. You really have to play it by ear. So yeah, we will IPO at some point in the future, I bet. I don't know when that's going to be.
It's an interesting alternative to the City AM headline of we get several offers to be acquired per month, which, again, City AM, shout out Lindsay Barber and everybody at City AM. Great headline choice. So is acquisition off the table in your mind? It's
not our goal.
Yeah.
I can't rule it out because stuff changes. For me, sitting here today, an acquisition would feel like a failure. Mm-hmm. I'll probably regret saying that in 3 or 4 years.
Somebody will spin it out of context or something.
But you know what I mean? Like, the companies that really make an impact on the world tend to be those that stay independent, that IPO and are strong founder-led businesses, the Googles and Facebooks of the world. The ones who get swallowed up do so because they weren't able to meet their objectives on their own, and they needed more support, whatever. And that might happen to us. I really hope it doesn't. So it's not plan A for sure.
Interesting perspective. And I think I speak to a lot of kind of more cynical bankers who suggest, once they're acquired, they'll just become like First Direct and it'll be a nice challenger brand and it'll go away. And surely that's the only possible exit. So what do you see as like the longer term business model? Because people have thrown this at Monzo for some time. Is like, surely a current account by itself can't be profitable. I think you've answered that before, but has that thinking evolved in terms of where your profitability is going to go? Because I saw you're looking for a VP of lending, right? So you're definitely looking at lending now as potentially a business line.
Oh, for sure. We've intended to do balance sheet lending from day one. It's always been part of our business plan. Mm. I see it as a medium-term revenue driver. The long-term, I think this sort of worries me. If everyone agrees on this being the end game, it probably is wrong. But I think there's sort of consensus within the fintech industry, I guess, that the winning model is a hub, is a control center, is a platform or a marketplace. So as a consumer, you have a set of different financial needs. You have diverse different providers. Maintaining 15 or 20 accounts to manage your money is a pain in the ass. And wouldn't it be nicer if that was all brought into a single place to give you visibility and control? So that's our end game. That's what we're aiming for. It's also what a lot of other people are aiming for. So Tandem, probably Starling, probably Revolut, N26 in Germany. A lot of the aggregators and price comparison sites all have this sort of end game in mind. It then becomes a question of tactical execution of like, what is the best entry vector or attack vector to try and get there? Because it has massive network effects. It has huge economies of scale. And the business model there is basically that we become your trusted financial advisor is a tricky regulated term, but as sort of
financial partner, maybe also somebody's on your, like, I'm struggling to say something without coming up with a marketing slogan for another bank. You know what I mean? Like it's standing next to you. It's kind of got your back kind of thing.
Jason always used to say it's like a good waiter.
Yeah.
So anyway, that's the model we're going for. Basically, a marketplace that helps you find and pick and interact with these different service providers, saves you money or earns you money or saves you time, and takes some kind of service fee or affiliate fee or profit share off the back of that. Simple example. As your bank, it's pretty easy to tell when you've gone from a fixed rate gas and electricity tariff to a variable rate. If you switch back to a fixed rate, you typically save £250 or £300 a year. 60% of households don't do that. This marketplace in the future could make that really, really simple. And for the convenience of saving 300 quid, what's a fair profit share? I don't know, 30 quid, 45 quid. So it's that kind of model times 15 or 20 different products. It's your mortgage, it's your car insurance, it's your phone bill, it's your savings and investments, your ISA, it might be cashback from retailers. All of those things aggregate in this control center. That is our ultimate end goal, but you need massive scale to make it work.
And what's your thesis on how you get there? How do you become the choice for consumers to get there?
We're taking the approach of like going with a current account and trying to get people's salaries in, which as many people on Twitter have noted, like has historically not worked for loads of people. I think, but it's the one we're betting on. We're seeing great early data on people actually putting their salaries in. So a few kind of tactical points. One, make it really easy to get started. So let customers dip their toes in before they fully commit. So you can get a hot roller card, put 100 quid on it, and away you go. You don't have to start with your salary. Most sort of explosive consumer internet companies have that very fast onboarding. Second, you have to build in virality or network effect somehow. Users have to get other users. You cannot pay linearly or even sublinearly for acquisition. As you grow, acquiring customers via paid advertising typically gets more and more and more expensive. Mm-hmm. You never reach a mass scale like that. Companies like Facebook or Twitter or Instagram, whatever, always have these viral loops built in. So you need really, really fast onboarding. You need the viral loops to get more customers in, to build the massive scale. Then you need access or visibility over all of the kind of transaction data. Typically that's salary, it's direct debits, it's standing orders, it's where they're spending. And then you need to go and find an ecosystem of partners who are willing to plug in and sort of give your customers better service. Mm-hmm. I mean, it's a phenomenal undertaking. I think it's going to take 10 years.
So that's a heck of a journey you've got in front of you. That's 10 years to IPO.
So the flip side, though, like the counterpoint, the argument is like, you're spending all this time doing all these hard things. Why don't you just build an aggregating hub on top of the banks? You don't have to get the salary. You don't have to get people to switch. You deliver them 90% of benefit with 10% of the effort, and you'll build massive scale.
But per the CMA delaying, right? Can you count on that? I wonder. I think I'd probably agree with you on that assessment.